what would be the benefits of using Echo compared to some of the traditional platforms, like you mentioned, Coinbase?
They have to keep on bolting on new features, but they're running old systems. We're coming in now basically scratch built with the newest standards.
Property is a very big deal.
The bit where you carve up a property into tokens is called fractionalization. Because it's fractionalized, you don't necessarily have to have such a large amount of money for the average user. So you could have a portion of a property, and in the meantime, you could borrow against, say, in Stablecoin and buy something else.
Are you integrating any AI into Echo? And if so, how would that benefit the consumer?
We're looking right now at doing...
I'm Matthew Fraser, and this is Crypto Collective. After making millions with Amazon and e-commerce, I realized that if I was starting again today, crypto would be my first choice. I'm here to help you take your first steps and build real wealth. Ready to set yourself up for life? Let's go. Today, I'm joined by Sam Dorrer, CEO of Echo, a DeFi platform that is bridging traditional finance and blockchain, helping investors unlock smarter, more secure ways to build long-term wealth. Sam's not just a CEO, he's also the youngest board member on the Isle of Man's Government Digital Asset Committee, where he helps shape policy for the future of finance. Echo is doing something unique by bringing real-world assets on-chain in a way that's simple, safe, and built for long-term investors. If you're serious about crypto, wealth building, and the future of money, this one's for you. Let's get into it. Sam Dorrer, welcome to Crypto Collective. How are you doing?
Hi, Matthew. Thanks for having me.
Absolute pleasure. Sam, can you tell us about this new platform that you're spearheading, which is called Echo in this fintech space, and what is it bringing to the finance, industry as a whole?
Echo as a platform is up and available now. You can find it on echo.im. It's made up of an initial set of products, one of them being Echo Token, one is Echo X, Echo Pro, and then another product called Echo Elite. And that makes up the initial ecosystem.
How does that differ to other types of platforms that are out there?
So there's a few. It's on a per product basis, I suppose. So Echo Token, for example, is a deflationary yield token as opposed to an inflationary token. So the Echo Token itself, 50% of top line revenue, which runs through Echo X and Echo Pro, is returned proportionally to Echo Token holders. On the exchange side, it will be something which a lot of people are familiar with cryptocurrency generally, but for us, it's more of a trial where we're running cryptocurrencies through to begin with before we add real world assets and other instruments to the platform.
And so talk about that little part you mentioned before, which is about customers, sharing in revenue share. Is that right?
Yeah, exactly that. And it's a super important thing to note that it's top line revenue too.
Wow.
So it's really easy maths, right? We can't cook the books at all. So the way it works is literally, so normally when you trade something on an exchange, there's a fee. Well, either there's a fee normally, or they say that there's no fee and put a spread on the thing and hit you in that way. So there's a fee, which for us is 10 BP, which is 0.1%, which I think is I'm not going to say it's the lowest, but it's definitely an industry low, I think. And of that, 50% is passed on proportionally to Echo Token holders in Stablecoin. So you don't get more Echo Token, you get Stablecoin for that. And then 10% is burned, which is and that's bought off the open market. So buy back and burn.
Right.
So it's deflationary as well.
I think that's a really important point there, Sam, that it's not the token, it's actually stablecoin.
Yeah.
Can you just talk to me a little bit more about that? Because I think we sort of just brushed over it, but I think compared to how other systems work, this is a big difference.
Yeah, it's a huge deal, especially in DeFi land. Like last bull run, you had the farm tokens, which were super popular, where you'd have these kind of insane interest rates for staking, shitcoin X, and what would end up happening though is they'd mint into oblivion basically, because you're getting interest for in-kind interest, and all that happens is you think you're gaining interest, but you're not really. It's just inflating itself away. And it just becomes a case of, pass the parcel, or, who's going to be, musical chairs, or who's going to be left holding the bag, basically. Whereas
Yeah.
we wanted to create arguably a very long-term sustainable model for yield, which is actually has a flaw on it by definition, because it's based on exchange volume effectively. So
Hmm.
so the pitch, so to speak, for Echo Token at a very basic level is, do you think the exchange is going to get volume, and how much? And that's going to dictate ultimately the price of Echo Token, because that's the yield we're going to receive as well. So it's in some sense it's quite unique in the cryptocurrency space because it's not pure speculation.
Was there something in particular, Sam, that's happened in your life that made you think, I'm going to bring in this type of offering to clients because this again is very unique.
Yeah, I think for me, it sounds kind of cliche, but I really dislike consumers or retail customers getting taken advantage of. And for me, one of the easiest ways for whales or institutional types to do that kind of thing is exactly with bad tokenomics, or with schemes which almost guarantee you to lose. And I think that just kind of sucks, really. And
Mm.
I'd much rather people at least have, a fair shot, I think.
Yeah, a fair shot at actually making some profit. That's
Yeah, yeah,
that's
yeah.
what we're
I mean,
talking
I mean,
about.
on that note as well, it's been fascinating seeing all the stuff which has happened with Pump Fun, and the meme coin factory over on Solana. And
Mm.
for me, it's kind of a double-edged sword, because part of me likes it, part of me likes the community side of it. It's quite fun. The other part of me is it's sucking massive amounts of liquid out of retail customers, and effectively giving them nothing. Um, and there's arguments, at least on my side of the fence over here, which I'm hearing, which is part of the reason why you're not seeing some of the alt run happening, is because Pump Fun has sucked out so much of the retail money this cycle.
Oh, interesting. I have heard that as well about the liquidity, but
Mm.
I've also just in recent days heard that the market could be going up at any moment. I think the big one today, Sam, is actually if the Solana ETF comes off. I think that was the narrative that's being spoken about now. Would you say that if that does come off, then there could be a more of an alt run?
I think it has to get beyond a place where people are just hoping the institutional client is going to come in and save them. Like a lot of
Not the
these
retailer.
altcoins and chains and stuff, they need to provide real value to customers, and that's at an application level sometimes as well. So obviously they can say that, oh, we're an infrastructure play, etc. But if there's nothing on the chain worth using, it's why? um,
Right.
and for me, um, BTC already performs the function of being, effectively a buy and hold asset. I
Hmm.
don't think you necessarily need other equivalents. You need the other altcoins to do something. And ETH is historically been quite good at that because of the smart contracts. When it first came out and stuff, the smart contracts was novel compared to Bitcoin. So, it allowed certain use cases and things, but there's a pretty wide gap now, I think, between some of these different chains. My hope is that um, Solana can Solana has obviously become the kind of meme chain, which is fine. It's carved a niche, but I don't know if that's necessarily a great fit with an ETF.
Yeah.
But we'll see. Who
We'll see what the
knows?
market
It's
says.
not like Wall Street isn't up for a bet. So
Yeah. Well, speaking of different, I guess, different types of tokens, I know that Echo is going to be talking about or bringing in sort of real world assets into the mix. Can you talk about real world assets and how that will play a part within Echo?
yeah, sure. So a real world asset for your listeners. It's in the name, I suppose. So normally they're considered securities, or security tokens. They're sometimes referred to as, because usually you would have, say, a stock or a bond or a T-bill or something. You tokenize it, so you mint an equivalent onto the blockchain and custody, um, the real version of, is the idea. So
Hmm.
in principle, what happens is you have all the benefits of having your real world asset while also having the smart contracts and the blockchain stuff on top is the idea. Real world assets, of course, don't have to necessarily be just uh, stocks and bonds and stuff. They can, I mean, property is a big one which people are interested in. There's other
Hmm.
stuff too. There's a lot of play going on right now in private equity, or people selling private or tokenizing private companies, because it's an excellent way of raising funds without technically IPOing. Um,
Mm.
there's also some play around art and things like that. I mean, there's touches a bit on NFTs of that, but there's a lot of play really in what you can tokenize. I mean, for me, sitting on the other side of the fence, sitting on the other side here, and looking at what things we can tokenize, the easiest thing is to tokenize the things which have a well-known market price. So
Hmm.
the easy things are stuff like stocks and bonds because um, when you do the equivalent of you can Oracle track the price of say Apple stock to your Apple token. So you know that they're both worth the same amount. But it becomes much more difficult to do that on assets which don't necessarily have a market price, or it's more difficult to find out what the price might be. So that's where a lot of the real
Right, which is.
estate problems come in,
Mhm.
because who's to say what a house is worth? Is it what the real estate agent says? Is it what the seller says? Who's to say what the price is at any given moment? And that's where some of these other things can be more difficult.
So just in practical terms, Sam, do you think if you just talk about property, I know, certainly in Australia and other sort of Western parts of the world, property is a very big deal.
Mhm.
And so would you say then you would have a valuer perhaps that would go in and assess a value of XYZ property, and then it would be tokenized based on that, and then the retailers or I guess institutions could come in and buy those tokens and have a portion of the property? Would that be right?
Yeah, so that process, the bit where you carve up a property into tokens is called fractionalization. So that's when
Hmm.
you take the whole and you cut it into little pieces, but in this case, it's different tokens. So yes, that's exactly how it functions. The difficulty is in who holds the custody of the property and do people trust the valuation. Do you believe the valuation and do you trust the people which have the deed? Those are the two big issues with real estate.
Yeah, and so if people do have tokens, then Sam, in say in a property, I guess are they just hoping that over time this value of this one particular token goes up and they can then sell it? And do you think maybe just thinking about property, would you be able to even leverage off those tokens, as in take capital against those?
Yeah, yeah. This is exactly the same direction which we're thinking too. Um, Collateralization effectively. So what you
Hmm.
do is you take, in this case, the property token, and the nice thing being that because it's fractionalized, you don't necessarily have to have such a large amount of money for the average user in that one item. So you could have a portion of a property, you're hoping on the speculative gain, and in the meantime, you could borrow against, say, in stablecoin and buy something else. Um, Still, it's still hedging, obviously, and you could get liquidated. But the idea is that something like property or gold or something like that is much more stable to
Mm,
borrow against than straight cryptocurrency assets because they're less volatile.
yeah. Yeah, I think that's really, really powerful. The collateralization of the tokens, because right now we've seen that things like Bitcoin, for example, even in places like Australia and the US, you can now leverage your Bitcoin. So you can borrow against your Bitcoin, right, for either stable coin or cash. And I think that kind of leads down the path. Then we want to be able to still own property. Traditionally, property we can leverage.
Mhm.
And if we can now leverage tokens, I think that'd be great. Do you think that's going to be something that Echo in the future would implement into their platform?
Yeah. So part of our longer term roadmap is to have what's called a peer to contract protocol, which is a borrow lend protocol, which allows users on platform to not borrow against us as a platform, but to pool assets and then lend them out to other users or borrow from the pool. You see a similar thing with Aave, for example, in the DeFi
Hmm.
space. But the problem with Argo is what I just mentioned, which is that the most stable asset on there is Bitcoin. Um, and yes, it's perfectly reasonable to borrow against Bitcoin, but it can swing. And that can be slightly nerve-wracking, especially with very, very large numbers, because you can get liquidated basically.
Right. Yes, you want to be careful
Yeah.
of how much you're leveraging.
Yeah.
I want to just pivot, Sam, into something else, which is more about the Echo platform and about the governance of that. How does the governance work within Echo, and also what sort of security measures does Echo have for the everyday user?
Sure. So the governance is directly tied into the Echo token. So we have a phrase which is one token, one vote, one voice. And the idea behind that is we have a legal structure in place called the Echo Community Foundation, and that's an actual legal foundation, not just name only. And
Right.
part of that, part of the remit of that foundation is it's received 30% of the total supply of Echo token as part of a vesting schedule, so it receives it drip fed. And the remit is that it's never allowed to sell the Echo token. Um, and instead, it survives purely on the yield, which I mentioned, which is the top line revenue piece, into the foundation. And then what we say is every quarter, Echo token holders can vote on how that yield is spent. Um, and we give a number of options. So it's a kind of, I guess, the closest form of government is probably a republic or something like that. So we present a
Right.
number of options in different baskets, and then people vote into those choices. Is the idea. But we wanted to create a system which felt like your vote actually mattered, because it's very, very common in DAOs and in various other governance pieces that you get someone come in and swing, the whole vote, if they have enough of a particular token or holding or whatever. And
So what's going to be, Sam? Is there going to be protection, I guess, against people coming in and having over,
yeah,
over
because
51% share?
exactly, yeah, and the way that works though is because one token is one vote, and that is equal to a certain percentage of the foundation. So, um, effectively, if someone comes in and votes and has some enormous hold, they won't because of the way the tokenomics are. But let's say they had 10% of total supply and they chose to want to reinvest in Treasury, say. So they put that vote in. But all the rest of the 90% of people can still vote for various different baskets and different things. And we just cut up the yield into that percentage split. So what you
Right.
vote for still actually gets the stablecoin.
Yeah. One thing you touched on, though, which I think other people may not have picked up, is you said that the community cannot sell off the token.
Yeah. So the foundation can't sell the token. Yeah. Um, and we've done that
Right.
for your.
And why is that important, though?
It's important because the foundation has a very large supply of the token, and there's always a fear factor um, for potential token holders that the foundation will dump the token, or sell off the token in big chunks. Um, or it will do things like Crow did recently, crypto.com, where it used its own foundation vote to bring back in burnt tokens back into
Right.
the liquidity. And
Yeah.
we wanted to make it so that effectively the sole reason why we've put so much of that token into the foundation is so that it gets a big chunk of the yield off of it mostly. Um, so there's lots of safety stuff around the reasons why we've done that. And once again, it's a long-term play. We're looking at it,
Yeah.
that kind of setup will last for a very long time. It's not a flash in the pan kind of setup.
Yeah, Sam, I think that is so important because it really goes down to the culture
Mm,
and the mindset, I guess, of Echo
yeah,
behind the scenes. Implementing those types of foundational structures, and
yeah,
which is obviously much better for the consumer, for the retailer, the institutional investor who's coming into Echo. And so I just really wanted to highlight that because if you look at other platforms, they're a bit more rogue,
yeah,
right?
yeah. No,
So
sure.
Echo is
And
trying to.
and I know I always say this to like my colleagues or other investors and stuff, and it's like, if you want like a quick buck, there's easier ways to do this than what we're doing. but it's flash in the pan, right? It's stuff which is going to be here today, gone tomorrow, um, and won't have the kind of potential explosive growth which Echo can have.
Yeah, you touched as well on before about that the governance of where the year will be spent. Is that right? And you'll give options. I know. I just wanted to ask you because there's been so much happening now in the space of institutions and now, of course, governments buying into Bitcoin. So, would one of those options be buying Bitcoin to, I guess, build a treasury of Bitcoin for Echo?
Yeah. So one of the five baskets is exactly that. It's treasury related. It's a treasury related basket basically, and one of those
Hmm.
things could be to gain other assets, for example, which are yield producing. So you start getting this snowball effect inside the foundation, where yield from the Echo token is used to purchase other cryptocurrency assets or other assets, which are then also yield producing because it's all staying inside of that foundation, right? So the
Mm.
community has a real chance to build the foundation out into a real powerhouse on the treasury side. And when that does happen, then suddenly all those other baskets have a lot more power too, like in research and development, or in marketing, or in philanthropy. So it's all kind of theoretically like upward cycling is the idea.
Mm. It could be a huge play, though. If we've seen what's happened in other companies, of course, Strategy is obviously the leader in this space of building a Bitcoin treasury, and a lot of other companies are doing the same thing. So I think over time it could be a real game changer for Echo and also the people who hold Echo tokens.
Yeah, I mean, we might at some point do votes which are, we do a quarter where we return a big chunk of the yield that quarter to Echo token holders. For example, that could be something which we put up for vote, for example, because we do want the community to feel like they are part of the platform, and that's kind of we try to create it so it's not just marketing spiel, but is actually systemic structure inside the platform which forces that to happen.
Hey, just quickly, if you're ready to dive deeper into crypto and Bitcoin and build real wealth, join my free crypto collective community. It's where I share exclusive insights and strategies and live discussions to help you succeed, whether you're a beginner or scaling your portfolio. Click on the link in the description and join us today. Now back to the episode. So Sam, for trades at different levels, you've got Echo X and Echo Pro. So how do those platforms or those portions differ within Echo? And do you need to be an experienced person to come into Echo, or do you cater for new people as well?
Yeah, so Echo X and Echo Pro, first of all, they have the same fee structure, so it's a purely utilitarian or UI difference between the two. Echo X is what would be traditionally considered a quick swap function. So
Mm-hmm.
you type in, I want to buy one Bitcoin, and it will show that's going to cost 100 and whatever thousand whenever this releases dollars, that is. And
250,000,
yeah,
Sam.
exactly,
Come on.
250. And you press the button and it makes a swap for you, easy, done. And that's Echo X effectively. It's
Mm-hmm.
it would be considered a very user-friendly retail tool. Still has lots of token pairs, etc., but just that kind of UI functionality. And then Echo Pro is more what you would be used to from other cryptocurrency exchanges, your Krakens, your Coinbases, etc. And when I say that, I mean a good example is Coinbase Pro, for example,
Mm-hmm.
which has various other order types and things like that.
Well, so tell me then, Sam, what would be the differences, I guess, or the benefits of using Echo compared to some of the traditional platforms that people are currently using, like you mentioned, Coinbase?
Yeah, so I mean, one of the things with Coinbase is it's bloody expensive. It's
Right. So
first of
cost,
all,
cost number one.
yeah. First of all, yeah. I mean, they have a similar setup where they have um, a a kind of more retail friendly, quick swappy type um, setup, but the fees on that can be crazy. I mean, I've seen is it 0.6 now or 1% or something? It's orders of magnitude more expensive, basically. Um, Coinbase Pro um, is good with the order types and stuff, but I mean, this goes back to an architecture question, really, which is a lot of these exchanges have been around for a while now, and they are in the situation where they have to keep on bolting on new features, but they're running old systems, right? Whereas we're coming in now basically scratch built with the newest standards, and it's kind of the difference between I get, and I'll make the analogy with the AI stuff, which is happening right now, where you're getting these big legacy companies who are like trying to find a way to make the AI fit into their organization, or you're getting, these AI native companies come in and just spin the whole thing up, because they don't have any of like the problems associated with trying to bolt a new technology into an old system and all the legacy code and all the rest of it. So that's some of it, I would say.
Well, you touched on AI, Sam. I can't now just not talk about AI. It is a hot topic.
Yeah.
So tell me, how does AI, or are you integrating any AI into Echo? And if so, how would that benefit the consumer or your customer?
Yeah, we are. We're looking right now at doing direct from or agentic order book. And what that is effectively is you can sit inside ChatGPT, you have a plugin into Echo, and you can just do trading via your LLM. So you can just say to ChatGPT, get me Bitcoin at the best price in the next 24 hours, and it will go away via the plugin into Echo and do that for you. So we're looking at
Wow.
stuff like that right now, because my gut feeling on it, and it's interesting hearing what some of the guys at Google and stuff are saying about how maybe SaaS is dead, or this idea of having a user interface that we're used to, and will everything just be done via agents, where my agent talks to Sam agent talks to Matthew agent, and they arrange some stuff between themselves and return the answer to us, as opposed to having some kind of middle platform, which does some of this stuff. I think we're a bit off from that still, so I'm not too nervous at this point with what we're building out. And I think there's still some advantage, particularly at a certain institutional level, where you want sight and touch on the thing. But no, I think that there's definitely a world where the retail customer does their trading via LLM, I think.
Yeah. Well, the headline now, Sam, is SaaS is dead.
Yeah. Yeah.
That's gonna be the reel. The headline reel. SaaS is dead.
I'm in good company on that too. I mean, this is what a lot of the the Mag 7 guys are talking about right now. I mean, I don't think Microsoft are going to say it's too scary for them, but the others are. So
Yeah, but of course, this is the reason why you're in this space, Sam, because you are obviously leading the way within the fintech space. Within now, you're going to obviously be leading the way within AIs as well, within Echo. This leads me to another question, though, because I know a lot of people will be asking me, wow, because we've seen things on, TikTok or what have you, of these AI bots. And these AI bots somehow plug into a trading software and can make you $1 bazillion. Is that true? Because you will know, because you've got a lot of experience in this space. Is that true? And if not true, what is there out there where literally there is an AI bot that can help with trading? Like I could put $10,000 in it, it makes me 10% a day, for example.
yeah. We've thought about this bot side. I mean, because really it's AI, but it's sort of not. It's mostly it's just a cover on bots mostly.
Right.
But we've looked at this a lot. There's a different difference between what a normal retail customer will have access to and what a large institution is able to put together. I mean, for example, we're building out with a New York quant fund right now. I think called a market making matrix, and that has a massive decision tree in almost instantaneous speed, for trading effectively. And for us, we're using it for market making so that we have stronger internal swaps inside the Echo platform. But you can see how quant funds and stuff would use the thing to just make a ton of money. The problem with most of those systems
We
is
like that, Sam.
yeah, the problem with most of these systems is they cost an absolute fortune, and
Right.
or you're very latency dependent if they're high frequency, right? Which is why so many of these New York funds are like, pay a fortune to sit next to the, the exchange, because every millisecond counts. We obviously have an advantage in actually being able to sit directly inside our own exchange, so that's not a problem for us. But we're certainly looking at some of that stuff on the consumer side. Yeah, we are looking at agentic style bots where they kind of, because we will do basic stuff which most platforms do, where you can set up grid trading bots and stuff like that, basically kind of plug and play type stuff. But we're also looking at building kind of almost like personality type bots. So what's your kind of,
That could be scary.
yeah. So it's like a trading style, or like it includes some of the risk profile of the
Oh,
user
interesting.
into the bot. So it won't, we're before you put your funds into it, there'll be a risk profiling for the user on like what kind of thing are you comfortable with, or all of that kind
Yes.
of stuff.
So you as a user could come in and do a sort of a risk profile on your own personality. Then
Yeah.
the bot, let's say, is then built off that,
Yeah. So
your
you're not
sort
going
of
to get a
unique parameters.
situation where, Matthew, all Matthew does normally is buy Bitcoin and sit on it, and then it comes in and high frequency trades at 10x leverage shitcoins.
Right.
There's a kind of
There's a difference.
yeah, there's a difference. Obviously, there's a difference, and for us, it's we we don't want to get in the way of what people want to do. So we're Switzerland in terms of how people want to trade. We just want to facilitate it, but we don't want to get people in sticky situations which they don't want to be in, I suppose.
Yeah. Sam, I want to just pivot for a second into DeFi because you've got so much experience in this space, years and years of being in the cryptocurrency industry. I just want to know, what do you think is the main shift happening in the crypto DeFi space, and what do you see happening in sort of, I guess, in the mid to long term for DeFi?
I think the hot stuff right now, I don't know if it's really classified as DeFi, but the stablecoin stuff is big right now. Who's going to win the stablecoin war? On
Who
the
is
on
going to win the stablecoin war, Sam?
on the institutional level. I mean, I think it's literally today which JP Morgan has just planted a flag with their new
Yes.
stable coin. Obviously, you've got USDC, you've got USDT just got kicked out of the EU because of MiCA regulation.
Oh,
So Tether might be tumbling down after that. Uh, there's
that's
oh,
like breaking news.
yeah. So there's lots of different things that could happen. I think my gut feeling on it is what will end up happening is
Mm.
most of the stable coins right now, and I don't know if your users understand how these companies make money. So Tether, for example, what it does to make money is it receives your dollar bills, your paper bills, and it mints you like a real world asset. It mints you
Hmm.
a stable coin, but it's still got all of those paper dollars. And what it does with those paper dollars is it buys stuff like T-bills, which are an interest-bearing instrument. So what they're doing effectively is they're taking your money, making interest on it, and giving you no interest. They're
Hmm.
just
Yeah,
giving you the stable coin.
a stablecoin. Hmm.
Yeah, which is why Tether last year made more money than Goldman Sachs with like 50 employees.
Wow. You know what, Sam? That is the business model we need.
And you see those charts of kind of like revenue per employee, and it's like, I don't know, $40 million or something insane.
Wow.
um,
That's incredible. That's incredible.
but I think what will end up happening is you'll get some stablecoin issuer who will come in and hand the yield back to the stablecoin holder.
Hmm.
And as soon as someone does that, all of those other ones are dead in the water, really. Um,
Unless they play along.
unless they play along, because it's very difficult to turn around and say, you know, your stable coin is at a smart contract level interest bearing. it's hard to compete with that. The interest would literally drop into your wallet um, just by sitting on it, which is something which could happen. So we'll see if that comes along on the stablecoin side. Also in DeFi, big at the moment is the RWA stuff. Obviously, RWAs are big right now. There's a lot of play around that. The problem most of them face, and where I think Echo has a distinct advantage, is they're all doing little bits of the puzzle.
Mm-hmm.
And really what's required is for a platform to be custodian, broker, and exchange. You need the end-to-end suite, so that you can hold the real world asset and trust it to hold the real world asset. You can buy and sell real world assets. You have a tokenization engine to turn them into tokens, and also an exchange to list those tokens on. And you need that full sweep. Otherwise, you end up with kind of someone who just does custody, or someone who is waiting for people to come to them with assets to put on the exchange, or
Yeah.
they just do the traditional brokerage piece. And for me, that's where Echo starts melding two worlds and starts being both a traditional platform and a fintech blockchain platform.
Mm-hmm.
And for me, that's the kind of long-term goal for Echo, that it becomes this bridging piece between the two worlds.
Yeah. Sam, you touched on JP Morgan. I think you just said JP Morgan and their stablecoin. There's obviously something that's happening in this space because of course, the regulations have changed in the US. It now enables main banking institutions to custody Bitcoin, especially, and probably cryptocurrency. And what we're going to see, I think I'm led to believe, is that those institutions may merge into becoming exchanges themselves. And on the same token, we've seen exchanges who may end up getting banking licenses.
Yeah.
So they'll start sort of merging together. And I think mainly because the banks now see that the crypto space is so huge. There's a lot of people making money, like you mentioned about Tether, how much money they're making.
Yeah.
Do you think then, is that sort of something that you foresee in the forward plans of Echo? Does something like that come into play? Maybe they get a banking license or something like that. And if not, then what are the future plans for Echo? What do you see?
Yeah, sure. So actually, pretty soon on the roadmap, probably before the new year, we have a partnership with a, a banking provider, an EMI, who will allow us to have virtual IBANs attached to user accounts, so you can do direct bank transfer directly into the Echo platform, and then you can swap into stablecoin directly.
Mm-hmm.
That's a big deal, because one of the main problems that people face when dealing with the ramping issue is that your bank blocks payments
Yes.
to cryptocurrency exchanges, for example. But the nice thing about this setup is they don't see that. They see a bank to bank transfer. They
Mm-hmm.
see they see transfer from Chase to RBS, and that
Mm-hmm.
that doesn't raise the flags, which is a experience big plus. But yes, I agree that I think the all-in-one ecosystem thing is definitely the vision, to kind of have users come in and not have to leave, that they can
Mm.
do all of the various things they want to do inside the platform is definitely the plan for sure.
Now, I just want to touch on security just in Echo itself, because I know a lot of people are thinking about, if I'm going to be putting money into the Echo platform, what sort of security measures do they have? And I think even more so, Sam, what sort of experience do you bring to the table? What is your background?
Sure. So Echo uses what are called MPC shard wallets, or multi-party computation wallets. And the way they work is, normally with a wallet, you have a key, obviously.
Mm-hmm.
And MPC wallets cut the key into lots of different pieces, and then are reformed at the moment when you sign in the centralized platform. This is used by, and our system is Fireblocks effectively. And that's the system which is used by people like JP Morgan and these other big players
Mm.
to hold their assets. And the MPC sharding way of doing wallet security, touch wood, but hasn't been breached yet. So it's a very secure way to hold cryptocurrency assets. On On that note, though, I would say that most breaches which happen on exchange are not technical breaches. They're what
Right.
would be considered social breaches. Um,
Mm-hmm.
and uh, that's something which, and I make the example of a bank vault, right? Where, you know, if you want to rob a bank, you don't go down to the vault and try and drill through the vault door. Um, it's just too much work. What you would do is you make friends of the security guard to open the vault door for you. um,
Yes.
and that's the difference between a technical breach and a social breach, right?
Mm.
Where a lot of these hackers and stuff, they try and get in with stupid stuff like email phishing, or I've heard crazy stuff where like cleaners and stuff, or people impersonate cleaners coming with USB sticks into your office and stuff like that.
Wow.
It's
So
stuff
what
like,
sort of so what?
yeah, it's stuff
Yeah.
like
So
that.
stuff like that, Sam. So how do you combat? As the guy in charge of Echo, how do you combat things like that within your own
Yeah,
organization?
it's a bit nerve-wracking when you see, all the French cryptocurrency exchange owners, their families getting dragged into vans and stuff.
Oh, yeah, exactly.
But I mean, that's one of the benefits of living on the Isle of Man, I suppose, that it's, basically the safest country on earth apart from Monaco. So that
Right.
helps
Okay.
personally, obviously.
That's a sales pitch for Isle of Man. There
It
we go.
is, yeah, yeah. Isle of Man hat on.
Yeah.
And I think for me the most important thing is that there's limits in play, or what are called signing wallets for treasury funds, for example, or the moving of
Hmm.
large assets inside of the Echo platform. Are Is a very limited amount of people who have signing rights, basically, for us.
Hmm.
It's not something which is handed out. I think in our organization there's 5 people who can sign um, those kinds of transactions, and you need 3 or 5 to have something go through. Um,
Right.
so
And then Sam, just touching on your background as well.
yeah, yeah. So I a serial entrepreneur, I suppose you'd say, to
Yes.
my shame. And, I
We need people like you, though, Sam. We need
yeah,
entrepreneurial people in the world.
yeah. I founded
They
my
take a lot.
I founded my first company at 21.
Okay.
And that was a research and development company, which uh, basically invented new products, which we then patented and sold to large corporations. I did that
Mhm.
for a number of years, uh, and then I had a I had a very very big deal on the table with that company for a 9-figure sum, and it took 18 months in the boardroom, back and forth with that baby, and eventually it all fell through. No budget because of COVID.
Oh
So
no.
I got
It
a
was
bit burnt.
there. It was there
Yeah,
for you, Sam. Yeah.
I got a bit burnt out on doing that stuff, and thought, you know what, I'll go and do something else. And I'd always been playing with cryptocurrency kind of personally in the background, and thought, you know what, I
Hmm.
think I can do. I'll give a shot at doing a better job at this, and some of the issues
Yeah.
which
Well,
are
I think.
at place.
Yeah, and you're also the youngest. Was it youngest board member on the Isle of Man crypto
Yeah, it's
agency?
it's it's a bit bigger than just crypto, actually. So there's a Department of Enterprise for the Isle of Man government, and I sit on what's called the Digital Isle of Man board. So I'm a board member effectively for technology on the Isle of Man.
Hmm.
And there's not official seats for this kind of thing, but I'm sort of in the fintech crypto kind of seat for that, I suppose you'd say, unofficially. Uh, but yeah,
Yeah.
I am the youngest board member to sit on that.
Amazing. Well, Sam, thank you so much. I just want to just wrap this up. We're just asking you, how can people, because obviously Echo is doing some incredible things in this space, and I really think people should jump in and at least have a look at the offerings there, maybe take advantage of the tokens offerings as well. How can people get in touch with Echo and check it out?
Sure. So go to www.echo.im. Um, that will you can is KYC is required to
Hmm.
get in, but it's I like to think it's a very we've spent a lot of time trying to get that
It's
onboarding
worthwhile.
as smooth as possible. Um, we do have a thing called magic links as well, which is quite interesting. So we're passwordless. So a password is not required to log into Echo, which is quite cool too. That's another security feature really where we one of the main reasons for breach on the consumer side is people losing or forgetting passwords. So we use magic links instead, just to so people, you don't have to remember your password as well, which is nice.
That's good.
Yeah, at the moment we have a little bit of Echo token left in the final bit of pre-sale, basically, before it goes live on exchange as a trading pair. So do take advantage of that at the moment if you want to.
And they can find that, Sam, on the website.
Yeah,
if they want to take advantage of the token.
If you sign up, you can purchase with Stablecoin.
Oh, excellent. Okay, well, we'll leave links to all those in the show notes as well. And just say Sam Dorrer from Echo, thank you so much for joining us on Crypto Collective.
Thanks, Matthew. Cheers.
Thanks for tuning in to Crypto Collective. If you've enjoyed this episode, the best way to show your support is to leave a 5-star review on Apple Podcast or Spotify, and make sure to subscribe to the YouTube channel so you don't miss an episode. You can also find more of me at I'm Matthew Fraser on all social media platforms.